euro head to 140. Hi, it's Charlie giving you today's video. So that's quite a bold title, isn't it? Let's go and have a look at this. So we're technically going to have a look at this, but before we go into the technicals, let's talk about the backdrop a little bit. So the euro, this is a monthly time frame here, and this is just for a bit of fun. You're not really going to, even I wouldn't trade the euro for 140 because swaps would be quite high. You could do it on a rolling quarterly contract. That would keep your swaps lower if you wanted to do something like that. But really, this is an exercise looking at this contract and for a bit of fun, but also just to set the scene, set the backdrop that over the next, couple of years, could it go there? So let's go and have a look at this. And we'll start off with the fundamentals, because what has changed in Europe is quite profound, at least for now. These are quite profound things that have gone on. So with the new German coalition government coming in, they've proposed this 500 billion package to be spent on infrastructure, green projects and defence. That's pretty significant. That's very significant. So it's almost like Germany is a super tanker, and it's been going in the wrong direction for a long time. It's been in recession for the last couple of years, not much getting done, and even though it's a large economy, a very big economy, this is major to really open up the purse strings and say, right, we're going to spend this on infrastructure projects. Obviously, manufacturing is going to benefit. Defense companies are going to benefit as well. Green energy looks like it's going to get allocated towards that as well. And so if that's the case, what's happened, that was announced, proposed a couple of weeks ago. And then as of today, I'm recording this Friday early evening, it looks like the coalition parties have already reached some sort of agreement that this is going to happen, that they're going to approve, because they've got to borrow money in this 500 billion. And as provided they can all agree on where it's being spent. So we still got a couple of days yet, because it's going to go to a vote on next Tuesday, on the 18th. So we'll see for sure by then. But there was certainly positive vibes coming out this morning. Right, okay. So let's assume that gets through. Okay, and let's also assume that the tariff wars calm down. We've still got tariff wars to deal with as well. So who knows? The tariffs that the US is looking to impose on the EU are coming in on the 2nd of April. So there's always things hurdles to clear. But let's go with it that those sorts of things calm down. Agreements are made to some degree or another, and so that's a positive for Europe. Right, now let's use that as the backdrop and look at the technicals. So I've got a monthly chart up here. I've got a couple of moving averages, a 100 moving average, and my yellow one is my 200. And I've got an MACD down the bottom. Right, okay. So just looking at the price action first of all, let's come to the historically what's happened. So we've got this nice declining channel here. So you can see this declining channel. This is on the monthly chart. Okay. And we can see that price is coming back up towards this declining channel line here. It's already tested it over here. It's tested it here. And it's tested it here last September time as well. So it's coming up for it at the moment. So we're not there yet. We haven't broken out as yet, but I'm just talking about the potentials here. Now, outside of that, we had these multiple tests of these lows here back in 2015 to 17. Then we had the breakdown through 2022. And we can now confirm that that was, well, by the looks of things, with the pushback up, that was a FB, a false break overall. Obviously, it was a false break on this time frame. It was still 800 pips or more. But and then we consolidated for a couple of years, and even into just a few weeks ago, I was still very bearish. Just 2 weeks ago, towards the euro, because the trend was that we'd broken down through this low of 23 and we'd broken down here. So just a couple of weeks ago, or a few weeks ago, it was still looking pretty bearish overall, for given the runs down that we'd had into the early part of this year. But this is not an insignificant easy for me to say, and it's not an insignificant event that that is taking place across Europe. It's not just Germany. Ursula von der Leyen, the EU Commission President, she's proposed 800 billion towards defence. All of these are huge amounts of cash to be spent across Europe on defence, towards defence manufacturing, and all the businesses that feed into that, manufacturing, engineering companies, and Christ knows whatever else. Huge amounts. So the scope is there, and that's what's helped create some of this change. So all things being equal, and we get, like I've already said, we can get through the tariff wars, then if we can, and if the euro was to break this trend line, then where do we go? Where does it go to? Right. Firstly, let's now come to the quarterly chart, because now we can see this prior rising trend line that we broke properly in 21. We'd tested it a few times, false breaks. Then we broke out, and now here we are over here. So if I zoom in a little bit, so we haven't closed this bar yet, so we don't know quite yet how. We still got a couple of weeks of trading to go, so we don't know how this is going to look, and it may sell back off between now and the end of the month, especially as we get closer to the end of the month and those looming tariffs. But if we can hold up and break out of that trend line, where to next? Well, we've got the obvious levels up here in the low 120s. That marries up with all of this. So the 120s there, we've got just below the 120 mark. There's always going to be lots of interim levels. The point of this was an exercise in looking at the very big picture. So, of course, 110 for the euro is going to be significant, 112, which was the highs of last year and the year before, then 115, which is going to be these highs going back to 2015-16, 120 area. There's loads of levels. That's not the point. My point was, is there the potential for the euro to have a much larger move overall? So let's say we had the ability to go into the future, maybe in a couple of years' time, and you could say, yes, it does get there. But of course, the way that it gets there might be like this. So, of course, we can't just necessarily just put a trade on and leave it. I guess in theory you could do if you had a rolling contract, but if you couldn't do it if you were just buying spot, because to hold on to a spot trade, spot FX, the swap fees would just add up too much because it'd be too long a duration of a trade. But that's not what I'm talking about. The point is, could the euro against the dollar do a major retracement of the entirety of the run from 2008 highs down to the 2022 lows? That's the point. We've got reason I've got the MACD on, because we've diverged here on the quarterly 2 years ago, nearly 3 years ago, but yeah, just over 2 years ago really, back in late 2022. And so could we still be playing out that momentum switch on the bigger picture? This is all just for fun, but I just wanted to pose that to you today. Now, like I said, it was only a few weeks ago, really, and at the beginning of the year, I was quite bearish, and the latter part of last year towards the euro, because everything looked quite nice to the downside. And if we sold off on tariff wars, then yeah, everything is back on for the downside, and maybe even a retest of those lows from 2022. But we have to go with price. And as often as being quoted in trading, you got to trade like a gorilla. Be willing to switch allegiances as price dictates. And there are times when you have to look at a chart and say, okay, that doesn't look quite so clear on the downside right now. What's the upside case? And let's have a look at that. So that's what I'm looking at here today. And big picture, could the euro end up in that 140 zone? Yeah, it's going to have loads of levels. Even if it does come up, it's going to have loads of resistance and hits of various levels along the way. But in 3 years' time or 2 years' time, could we be looking at this saying, oh yeah, it did come back up eventually after this huge rundown that it's had from being at 160 down to 95. So it did 6,500 pips to the downside. Could we have a little bit more of a retrace all the way back up? Who knows? But if the fundamentals are there, that the Eurozone as a whole, everything that's gone on in the past, certainly over the past, few years, and certainly what's happening in recent weeks, could this be finally a change of direction for the Eurozone economy as a result of all this? We have to be open at least to those sorts of events. So ponder it, let me know your thoughts, and enjoy your weekend.